Have you ever wondered what Tesla's stock price will be by 2030? Experts have varying opinions on where the leading EV company stocks will be in the next year. Stay tuned and keep watching to find out more. A lot of people believe that holding or buying stocks is a good long-term investment, even more so in established companies or brands. However, whether Tesla is a company worthy of an investment remains to be seen, as people are torn about whether the company's stock is overvalued or undervalued. In today's video, you will find out the Tesla stock price in 2023, according to Dave Lee. Dave Lee remains bullish on Tesla stocks and constantly says that he is in this venture for the long haul. He added that he firmly believes that Tesla will see spectacular growth by 2030. Dave Lee is a known YouTube content creator who shares his thoughts on the vision and reason to invest, what is not taught at school about investing, and the mind-boggling power of assets to work and grow. According to him, his channel is a stream of consciousness of my real-time thoughts on investing and the world. Lee, whose channel tackles all there is to know in investing, is also known as a Tesla bull and enthusiast. He recently shared a post saying how he raised his initial Tesla stock capital for about 100 times their actual worth. He shared that when he originally bought Tesla stock, he expected it to expand 10x, from $3 billion to $40 billion in market capitalization. Lee also stated that history could repeat itself. According to him, people are misinterpreting Tesla the way they misinterpreted the original iPhone. He firmly believes that Tesla is just getting started while embracing complexity through innovation. The famous YouTuber investor expressed his surprise with how his Tesla stock expanded 100x within 8 years of holding common stock. Because of this, he believes that the stock has the potential to go higher, perhaps or hopefully 100x more in another 8 years. The famous YouTube content creator said that instead of taking significant consideration in analyst projections for EPS or earnings per share, revenue, margin, and other metrics, many people rely only on their understanding of the earnings report on how their firm of choice performed. According to Lee, the problem with this strategy is that some analysts are not aware of the majority of ordinary stock shares. He said that some analysts even work for corporations where they do not even own any stock, which results in their nonchalance regarding whether the company's earnings are positive or negative. Investors and analyst expectations for young, high-growth businesses are usually at odds, but Tesla has successfully surpassed said expectations. For example, Tesla's first and second quarter earnings exceeded analyst projections but met investors' expectations. Lee said that the stock price is determined by its revenue. Production restrictions were one of the causes behind Tesla's first and second quarter performance and were a factor that caused the stock to fail to reach an all-time high. It is a known fact that Tesla's Giga Shanghai factory temporarily ceased operations when China enforced a zero-COVID policy when the pandemic swept the globe in 2020. Still, Tesla appears to have things under control, which was reflected in the first 2 quarters' success in 2022. Lee said that Tesla will need to show revenue growth to maintain its bullish rise. He added that they should deliver more automobiles every quarter than investors anticipate, and that the revenue should also exceed their expectations. With Tesla's aim to expand production by 50% by next year, an increase in the stock price should be expected. In fact, Lee hinted that Tesla's stock price could go up to $1,150 by the end of the year. Just after Tesla released its quarter 2 earnings report in July, Dave Lee, through his channel, presented his predicted numbers for the next 2 quarters. He said, "Let's take a look at what the next 2 quarters might look like, because investors are looking forward. They are not just going to dwell on past numbers. How much do you think Tesla will be worth by 2023? Share your thoughts in the comments section below." According to Lee, assuming that Tesla meets their 50% year-over-year growth guidance target, there will be more than 1,400,000 cars for the entire year. To achieve that, they should be able to deliver 385,000 cars in quarter 3 and 455,000 cars in the fourth quarter. If that happens, automotive revenues in quarter 3 should be around $20 billion and $24 billion in quarter 4. Regulatory credits for the third and third quarters are 200, which is less than 50 of that of the second quarter. Gross profit is around $6.5 billion and $7.8 billion for the third and fourth quarters, respectively. Gross margins are expected to improve to 31.9% and 32.3% from the second quarter's 29.3%. Quarter 3 revenue is predicted to be $22.7 and $26.5 billion for the fourth quarter. Gross margin GAAP will be around 28.9% and 29.7%, respectively. According to Lee's data, Tesla's stock price will be around $1,150 by the end of the year. This valuation is not that far off from other investors' valuations for the EV company stock. That said, a price tag higher than $1,150 will be Tesla's predicted worth by 2023. According to most Tesla stock price predictions for 2022 alone, Tesla stock could reach $1,200 this year if it grows by 35% over the year. That's the average growth estimate from a group of more than 30 analysts. One of the most bearish predictions comes from JP Morgan's team of analysts, who set their December 2022 target at $250. For 2023, Tesla's price prediction has the same 35% growth estimate, which would have Tesla stock at around $1,600 by 2023. Some forecasts are even more bullish, predicting annual growth of 70%, which would see the price at $2,600 by the end of 2023. Most longer-term Tesla stock forecasts have the stock priced at between $1,000 and $5,000. It should be noted, however, that predictions beyond the next couple of years are more speculative, but it is possible to estimate the size of the electric vehicle market and price Tesla accordingly. In line with that, the Fed's benchmark rate will end the year at 3.4% according to the midpoint of the target range of individual members' expectations. That reflects an upward revision of 1.5 percentage points from the March estimate. The committee then sees the rate rising to 3.8% in 2023, a full percentage point higher than what was expected in March. Tesla, on the other hand, continues to make sure to perform well on all fronts. Tesla continuously introduces new technologies like dry cell batteries, gigapress, and new alloys to allow dramatic factory production and speed improvements, which bode for a brighter future for the company. By 2023, Tesla Shanghai, along with other facilities, should be able to produce the new 4680 batteries and the front and rear casing. Tesla aims to produce 2 million cars per year through the Tesla Shanghai factory by the end of 2022. This target will be increased to 4 million cars per year from 2024 to 2025. Today, Tesla Shanghai has a production rate of 1.1 million cars per year, which is set to increase profits. The much-anticipated Cybertruck is also expected to be released by mid-2023. In fact, wait times on Tesla orders are extremely long. When asked about his thoughts about the concern on the pace of demand with the threat of a global recession, Emmanuel Rosner, a Deutsche Bank analyst, said that they can track the wait times to get a car when a reservation has been made based on their existing data. He said, "There has not been any compression in wait times. In most cases, whatever the model is, whatever the geography, you would have to wait several months, often into 2023, to get your Tesla." It can be noted that Tesla stock first appeared on the NASDAQ stock market in June 2010. At the time, the company had an enormous offering valued at $2 billion. However, on the very first day of trading, the stock price rose by almost 40%, closing up at 23.89%, raising just over $226 million, making the company valued at $2 billion. Today, Tesla remains at the top of the game and is still the market leader in the electric vehicle industry. However, Jesse Toprak, an auto industry veteran who is chief analyst at Autonomy, which offers electric cars by subscription, said that Tesla's market share will fall below 40% by the end of 2023, though its sales will continue to grow as the overall market expands. They will have a smaller share of a larger pot, Toprak shared, but their near monopoly on EV sales in the US will slowly diminish. For more Tesla stock content, visit our channel and watch our other videos.